Welcome back to the Property Triangle, episode 2. I am Arpit Shah, buyer's agent with BuyerBud, and today's episode we've got a power-packed one. We've got Dream Team here to answer every questions that you need to know when buying your next property. Joining me is Padmaja Patel from Ask Financial, a mortgage broker who knows how to make the banks dance for her clients, and then Nirali Parekh, a conveyancer who've just seen about every contract clause, title condition, and settlement drama under the sun. Today we are breaking down the entire journey from the moment you start thinking about finance to the day keys hit your hand, and we're busting a few myths along the way as well. Before we dive in, quick fire to warm things up. Padmaja and Nirali, I want your fastest, most shocking property story in under 30 seconds. Go.
Start you, Nirali, you start.
Yeah. Okay, so I had a situation where the clients obviously did not do the due diligence, did not get the contract reviewed, and turns out that when I received the contract, there is cladding issue, it's a building, and it would actually cost hefty to the clients with a lot of special levies and things. So it was kind of very difficult. But luckily, we were under the cooling off period, so I could actually advise the client
To pull
out. But yes, so that's why people think that it's not required to do the contract reviews, but it's the most important thing.
Of course. Yeah. Padmaja?
Okay, so I had two stories. Both are very small, but one is positively shocking. A recent client of mine came to me to buy their fifth investment property. They had like 4 already, including their PPOR, all 100% offset. They had 1.2 million borrowing capacity and 1 million in savings.
Good situation.
Yeah, that was like an amazing situation.
Yeah.
And they're gonna go very aggressively to build their portfolio. That was positively shocking. The negatively shocking was one of my client who actually went to the auction without pre-approval.
Yeah.
And they never spoke to me. We never had any contact before. And then they bid at the auction. Luckily, unluckily, they won.
Oh.
And then they came to me saying that, we won the auction, we want to go ahead. And I checked their borrowing. And in a straightforward case, it wasn't meeting.
Wow.
So what we had to do was, of course, it took some time. Lots of behind the curtains negotiation with different lenders. And on top of it, we also have to change the lender choices.
Yeah.
We had to restructure the entire debt, which kind of costed them time and money. Luckily, a good solicitor team on the other side, they are very important.
Yeah.
So they helped us to negotiate and, they were very good, even from the seller's side. So they helped us to extend the finance clause, etc.
Yeah.
And we ended up in a good situation. So it was a lucky win, very close, I would say. But always get your contracts reviewed, obviously, by a solicitor. Get the property, if you can, in your first place, get a buyer's agent. But speak to your mortgage broker. Very important to know your finance situation before you go and commit to anything.
Yeah. Perfect. Thank you so much. All right. Now, as a buyer's agent, I always say, your property team is like your pit crew in Formula One race. If one person is slow or sloppy, that just the whole race is lost. Nirali, let's start with you. Why do we really need a conveyancer? Isn't it just filing forms and checking spelling on the contract? Is there more than admin that you do?
Oh, obviously, this is a very underrated thing, and people think that conveyancers what do they have to do? Just exchange the forms, exchange the letters, emails, nothing like that.
Yeah.
But that's a total myth, I would say, because conveyancers are who will actually check all the legal terms in the contract and actually inform you what's there in the property, what you're getting into.
Sure.
If there is any restrictions that can actually cost you later, settlement will still happen, okay? But there are after consequences as well, which people won't know it.
Yeah.
Because the contract will actually say about that. Like if there are any restrictions, caveats, it's very important.
Yeah.
And our main thing is obviously that's the main thing that we'll advise the clients about with the overlay stuff. And yes, the transfer of the title from the vendors to the purchasers, because that's the most important thing.
Yeah.
But it's not like, you just say, and it's not just like a 2 minutes job that people can do.
Yeah.
Yes.
So let's say you receive a contract, right? What are the things that you're looking out for that most buyers are ignoring or not even understanding, what's written in the contract?
Yes. So mainly it's the special condition, because these days there are so many hidden special conditions, which additional charges, penalty interest that's been charged on the buyers by the vendors and the vendors' conveyancers. And it's really important that and if we have the chance, we just get rid of them before the contract gets signed, so that later on you don't have issues.
Of course, yeah.
And the other is mainly the title.
Yep.
Because it's really important to know if the title is cleared, are there any encumbrances, covenants, easements, any caveats, mortgages, and how it will impact the buyer in purchasing the property and getting it settled.
Got it. So what happens after the settlement? What documents does the buyer get after the settlement?
So obviously the transfer of land, where they can actually see from whose name it's been transferred under the purchaser's name. Then there's something called as notice of acquisition, which actually is being circulated to the council, water authorities, body corp, because that's the main document that they rely on. As they get the system updated accordingly with the new buyer's details. It's very important for them to have their contract of sale and all the email chain that's been communicated with all the people, not just with the conveyancers, but with the mortgage brokers, with the buyer's agents, everyone. But these are the main important thing. And settlement completion document, which has the detailed breakdown of how much funds has gone against which, because ultimately that's what the people care about.
Absolutely.
Yes, they should be aware of it, because there are a lot of hidden cost which buyers are don't even understand that where the money has just gone. So that's the important things.
Got it. So now here's where I've seen, buyers glaze over, overlays, zones, caveats, and, these days there's ChatGPT as well. You just upload the contract and, get a summary out of the contract. Other things, what are the deal breakers? What are the due diligence steps that, you normally would advise buyers, when you come across, let's say, an easement or overlay, bushfire, which things are deal breaker versus which things can be okay,
Okay. So with the easement, there are two type of easement, I would say. One is a very standard, which is drainage and sewage. And in most of the properties, you will get those easement. But the main deal breaker is where those easements are. If the easement is at the back where your garden area is, that's a very common thing. So, but if the easement is passing from between the property, then that's definitely a big deal breaker. Especially for the investors or even for the owner occupied, for that matter, because down the line, if they want to subdivide the property or even knock down, rebuild, there are certain restrictions from the council which will be very difficult for them to actually do it. So with the easement, that's the biggest deal breaker, I would say.
Makes sense.
And with the overlays, I would say that if it's under a bushfire, it's not a deal breaker, but definitely you need to do your due diligence by giving a call to the council to actually understand and get the information of how many times the property has been affected by the fire. And if it's not happened for last 10, 20 years, I would say you don't have to worry about it, but highly recommend to take the insurance.
Correct.
Yes, that's
I was
very
just going to highlight that. We often, when we look at certain overlays as well, next thing we always check is, okay, is the insurance high for that particular property? At the end of the day, especially we do help a lot of investor clients. So if the insurance premiums are high, then that affects your cash flow and other things as well. Also, for bushfire, it also depends on whether you're just planning to buy and hold the property for long term, or is it also you're looking to develop? Then you also have to factor in, certain BAL ratings in terms of construction and things like that.
And also to add on to that, insurance is also required if it's a flood-prone area, or even it's close to that.
Correct.
For that matter. I always tell my client, is your property on the slope? Because usually the property is not under the flood zone, but the road, the lane is actually
inundation.
Inundation overlay. So
great. And then caveats, are they basically a keep out sign or on the title, or can we work around them?
Depends what the caveat is about. Because if the caveat is just lodged by a mortgage for outstanding amounts or default that's been made by the vendors, then yes, if we get the notice from them that what's the outstanding amount, it's all good. that can be done. But there are caveats that's been lodged by council, for example, with the building orders, which the vendors haven't actually attended to, and outstanding amounts on mortgages by the third party, and we don't have the actual amount, then yes, definitely I would recommend all my clients that if there is a caveat, you need to be careful, because there has to be a special condition added
to be removed.
On that settlement. Or else you you can end the contract. Reason being is, with the caveats, whenever there is a caveat, there are high chances that the settlement will be delayed.
Yeah, got it.
Yeah. Can I add to that? I had a client who had a caveat by a family member who didn't want to sell it. So and the solicitor missed it, and there was a big drama. There was like my client had all movers and packers done. There were trucks outside, and settlement didn't happen.
Yeah.
Because I think some sort of a distant family member of the seller just didn't want the property to be sold.
Yeah, that usually happens if there is a separation and one partner doesn't want to actually sell the property. That's what they do.
So it's a big drama. It was a big drama and costed my client a lot. It was sad. It was sad.
So Nirali, what happens if the settlement is delayed by the seller? Is there penalties for them?
So unfortunately, Victoria doesn't have that laws that because it will always protect the vendors, not the purchasers. And that's something that we don't, as a conveyancer, we don't like, especially we are acting on behalf of buyers.
Correct.
Because if we delay the settlement even for a day, then there is penalty, interest and all. But yes, definitely, if there is like 2-3 months of delay without the vendors actually notifying us, then yes, buyers do have that right to actually end the contract, serve them with a notice, a default notice, and they can terminate the contract. But that is only in the worst case scenario when the vendors are not responsive or they don't give us the exact reason.
Makes sense. And then title insurance, is it worth the cost, or is it only for paranoid buyers?
So it depends on what property you're purchasing. So I actually recommend my clients these days, because if there is any illegal work or any work that's been done without taking any permits. Okay, so that's the most important thing. I'm like, just for your peace of mind, it's better to just take the title insurance. Because, and the second thing, title insurance also protects the boundaries. You never know. The boundaries has been created since so many years, and you won't know which part belongs to which. And especially if down the line, new neighbors come in and they actually contemplate that this property, this area belongs to me. And you will kind of lose a big amount of land. That affects your valuation at the end. But with the title insurance, they will actually fight it out for you and get all the cost for the surveyors, get it right.
Makes sense. Awesome. All right, we're going to move to finance foundations. So Patty, over to you, the money game. Let's start with the big one. If the banks are already offering loans, why are savvy investors still calling a mortgage broker first?
Okay, so that's a good one, actually. You tell me about that, Arpit. Would you go to 10 lenders and try and negotiate differently, separately with each lender, or you won't have someone to doing it for you? That's the first thing.
I think, that's a very good point, because you, as a mortgage broker, you've got access to multiple lenders, different products. If you go to a bank directly, they have just, maybe 1 or 5 products that they can offer you. So there's limited flexibility.
The other thing is your borrowing capacity. So when you go to a lender directly, they just work into their policy framework. They wouldn't try to think out of the box, how they can restructure your existing debt, how they can make sure that they preserve your borrowing capacity. They don't consider your future goals. So if you are into the game for the long term, if you're looking to make a portfolio, if you're looking to generate wealth through property, or if you're just making, make sure there are different people, different goals, you're planning a family down the lane. All of that comes into the consideration. It's not about just getting the lowest interest rate. Trust me. So mortgage broker does all of that in one go. So I would say.
So we just had a rate cut. So can a 0.25% rate cut or an interest rate savings, can that make a break a portfolio?
It depends. For an investor, it can. So let's say if you have 5 properties, 600K debt, about what? 600 to 700K a month. 5 properties, 750, so about $15,000 a year can improve your cash flow, massively.
And how much borrowing power can someone just lose by having a car loan or maxed out their credit card?
Okay, so let's say if you have a car loan for about 50K, you are losing about 200K in your borrowing power.
Wow. Yeah.
And don't forget, the car, you're paying $700 a month of installment. Think about buying a property which is $450K
Yes.
and going that towards the repayment of that.
Yeah.
That particular asset is increasing in the value. Think about the
Correct.
compounding effect.
Yeah.
how much money. So that cost is that car is costing
Absolutely.
you a lot more.
Yeah, yeah. No, I mean, we always, those are the general advices that we always ask, our clients as well. I'm sure you would be asking those questions as well. Like, what are some of the good debts versus bad debts, and those afterpay.
Afterpay. Oh my God, that's Afterpay. They are so sneaky.
Yeah.
Because I don't want to go into that. Otherwise this will go
No,
very
please go. Let's go into that. What is some of the
Yes.
afterpay horror stories?
Oh my God, you need to have another episode for that. Whole new episode. I have lots
Give
of
us
them.
a sneak peek or a scoop of one last client that you had where afterpay actually stopped them buying their next property.
Yes. So I had a client
Yeah.
who had Afterpay. He had every type of Afterpay. So, there are different companies. So one is Afterpay. There's one more. I forgot the name. Slash or
Yeah.
something. Yeah. So there's so many kind of
Klarna
companies.
Pay,
So
yeah.
he had an account, CBS Step Pay,
Yeah.
every account with everyone.
Yeah.
And he didn't realize that it actually affects their borrowing capacity.
Oh, just having the account itself.
Yes, it does.
Oh, wow.
So if they pick
Is
it
it?
up, in
Yeah.
your what they say statement,
Yeah.
and they say that okay, there are transactions, and even though they're not using it,
Yeah.
they will push the client to actually close it. And some companies
Wow.
have it dodgy, call center and all.
Yeah,
So
yeah,
it takes forever to just close the service. Even
Yes.
like the good companies,
Yeah.
they make
Yeah,
it
yeah.
hard for you to get out
Yeah,
of it.
of course.
So
Yeah,
that
yeah.
actually delayed their
Wow.
settlement.
Okay.
Yeah.
Interesting. All right. And what about like subscriptions, like your Netflix and things like that? Does that make a lot of difference to people, like Uber Eats and all that, or?
Uber Eats does.
Yeah?
Yes. So if you have frequent Uber Eats, so let's say you are going to purchase a property in next 3 months.
Yeah.
Close all your Afterpay.
Yes.
Stop Uber eating. Or pay with the cash if you must.
Yeah, that's a good one. Yeah.
Yes, if you must. And other bets.
Yeah.
They're big.
So basically,
Sporting bets.
Yeah, 3 months before you're looking to buy that property, and if you want to really maximize your borrowing capacity, I think
It's
that's a
not
good
only
option.
about maximizing a borrowing capacity. When you are having too many Uber Eats, when you're having lots of sports bets and and you're looking for even small debt.
Yeah.
So how bank look at you is not a very responsible person with your finances.
Okay.
And you are basically you're
Yeah.
looking for money everywhere.
Yes.
You must be short on money.
Yeah.
So it sort of changes your persona. You
Yeah.
becomes into a high risk category.
Yeah.
And then the way they judge your file or assess the file changes.
Amazing. Okay, thank you. That's a really good tip. Okay, why are SMSF loan this secret club that only a few lenders are allowed, and it's like only non-bank lenders? There's still more lenders coming up now, but still it's a very selective group of lenders. Why is that?
It is very heavily regulated by the government. That's
Yeah.
the first thing. It is your retirement nest. And of course, government wants to make sure that money is purely, for your retirement. So they want to make sure the auditing and all that policies around that is very, very strict. They want to make
Yeah.
sure people don't want to just flip it over and make money out of it
Yeah.
because there are lots of tax benefits associated with them. So they're closing all the loopholes. And
Okay.
that's why also they want to make sure the lenders,
Yeah.
they are not exploiting the clients.
Okay.
So it is harder for lenders as well.
Yeah.
And that's why from the lender's perspective, it is very difficult for them to actually get the license to sell that product.
Oh, okay. Okay.
Yeah,
So
that's one thing.
All right.
And from the purchaser's perspective, they want to make sure that they are protecting that particular product in all of their genuinity to make sure that it is only for the retirement and not just a money-making tool for people utilizing the loopholes heavily.
Okay, interesting. Okay. All right. Putting in an offer before speaking to a broker, is that a bold move or a financial suicide?
Just remember the story as I shared.
Yeah.
It is a financial suicide. Don't
Yeah,
do
don't do
that.
that.
Don't do that. Don't do that.
Two banks, same property, totally different valuation. What's going on behind the curtain?
So every property or every actually lender, they have their own people going out there. They have their own sort of way to look at the property. So one is, let's say, for example, one lender's representative is more conservative.
Yep.
So it depends on the lender's risk appetite. The other one is more optimistic. That's the only difference.
Yeah.
Not more than that. So it's more like, how you pursue the value of coach bag and how you pursue the value of,
Yeah, it is very subjective. And we see that time and again, like whenever we order valuation with different banks as well, when we're refinancing, there's different valuation even from a desktop perspective. So it really depends on which comparables they're looking at. And yeah, in-person valuations are absolutely subjective, depends on the valuer, how their mood on the day as well.
And also the lender's appetite.
Yeah,
so
yeah,
they're
absolutely.
being actually paid to be restrictive, not being nice towards the
Correct.
public.
Yeah. Okay. Loan structuring, is that a jargon or a cheat code for owning more property?
It is your gold key to generating wealth. If your structuring is wrong, you are out of the market sooner than you think.
Yeah, absolutely. Offset versus redraw. Where should everyone's spare dollar activity be?
See, essentially they are the same, but it depends very much on your final goal. So let's say if my client is an owner occupied and their goal is to pay off the property ASAP, go for redraw.
Okay.
It is a tad bit harder to access that money.
Yeah.
With offset, if you're an investor, go for it. You have more flexibility. When you are low on a cash flow, you can access the money pretty much straight away.
Yeah, okay. Interest only versus P&I, which puts more cash in an investor's pocket?
Interest only.
Yeah, amazing. Awesome. All right, we're going to move segments, some myth busting, mini round. So it's a lightning round. I'll throw some common property myth to each of you, and you've got 15 seconds to bust it. All right. Regional properties are too risky.
Myth.
Right, so obviously you see a lot of
It's
properties being
exactly.
bought. What about you as
Myth.
well?
Myth. So the recent people who have made lots of, they are actually, if you go out there in the property sort of forums, the people who actually made the money in last few rounds of property boom, all of them are in regional.
Exactly. Amazing. Awesome.
Regional is at the peak at the moment.
Yeah.
It's also about the entry point, easier entry point, and you can't buy a property when it's already grown and make profit. You have to buy a property where there is a potential to grow.
Yeah.
That's when you make money.
Right. Yeah. And you should always buy your home before your investment property.
Biggest myth ever.
No, biggest myth. Yeah, no.
Yeah. Glad we're on the same page on that one.
Yeah.
I think, do you remember that conversation we had? So I have my own portfolio. Arpit has his own portfolio as well. And both of us were like, I wish we started, when we started, we knew that rent investing, we would have done rent investing.
Oh, yes.
Yeah,
I tell the
absolutely.
same thing to my husband because even we bought that first home and then I'm like, no, you made the biggest mistake.
Yeah,
It's just,
correct.
we didn't know that.
Yeah, we didn't know that.
Yeah,
And
I think a lot of people do that. I think obviously people have their different reasons. Some people are looking for that stability, that security. But yeah, that is the traditional approach. But the modern approach is very well rent vesting. Pretty much, I would say every other client that we speak to, if they're buying their first property, they're always going through this two decision points where, okay, whether I should buy property to rent or to live in, and what's my strategy,
Strategy, yes,
When I bought my
yes.
first property, there was no strategy.
exactly.
There was only hoping.
Hoping, yes. And I'll throw one more thing. I bought like 3 PPR, like I've changed 3 PPR over the time. And your priorities changes. My first
Correct.
PPR was closer to the
Yes.
train station because there was no work from home 10 years ago.
Yeah.
I wanted to make sure I save on commute.
Exactly.
Then it changed because we wanted to stay closer to the lifestyle because we got married and didn't have kids.
Yeah.
We wanted to make most of it.
Yeah.
Then third one is because now we're looking for someone in a good school
Good
area
school,
because
yeah.
now we have kids. Think about it every time you're changing that. It is better to actually rent invest.
Yes.
If you are into the property game for long. I would
Correct.
say.
It gives you more flexibility. Again, if you're unsure about being in a particular location, you can't see yourself living there for the longer term.
Yeah.
Rent testing gives you that flexibility, but also it's like a vehicle for you to build wealth at the end of the day. Plus, it's all good debt. You can claim the repairs expenses, the interest
Exactly.
rates,
Yeah.
all the expenses that comes with owning a property.
Yes.
The beauty about investment is it's all claimable.
It's all claimable.
Whereas for an owner occupier, it's all after tax money going towards your mortgage repayment.
And it improves your borrowing capacity drastically.
Yeah.
Because you've got the rental
definitely.
income
Yeah,
coming
so
in. Yeah.
there are lots of people in the market who actually wants to increase their portfolio, but
Yeah.
they can't because they don't have a borrowing
Yeah.
capacity.
So actually, a lot of people, clients come to me saying that they want to buy investment, but they want to show it as PPR just to save the stamp duty. And I would like, please don't do that. You will get much more benefit out of just
it.
letting it being the investment property.
Yes.
But that's a very common
I
thing
think
that I get.
that is the biggest confusion, because a lot of people get attracted by those first homeowner grant or stamp duty savings, where they're not looking at a bigger long-term
picture. Yes.
Yeah. So like we are totally against buying property in an area which is still developing, which has got too much land supply, because growth doesn't happen in those locations. Also, vacancy rate tends to be really high.
Yeah.
Yes.
So instead, we want to be targeting established property. Again, you don't get those first homeowner grants, but
yes.
there's a reason why government is offering first homeowner grants for home and land
like
packages.
Exactly.
Short-term profit for
Short-term,
long-term loss.
yes.
Exactly.
You need to think about that.
All right. If a bank says no, it means you can't buy.
Biggest myth
No.
ever.
Go to a different bank.
No, go to a good broker.
Yeah,
You'll find a bank that will not say no to you.
Yeah, absolutely. No, that's a good point. All right. Buying without a conveyancer saves money.
Oh,
Has
definitely.
anyone bought a property without a conveyancer?
No, so I actually recently came across a situation where I wasn't actually acting on behalf of the vendors, but the vendors actually prepared the contract, and they thought they know everything.
What?
And, and I'm like,
Yeah.
how could? And when the conveyancing started, that's when they just appointed a conveyancer.
Okay.
And when I'm looking at the contract, it's like the special
Out of the
condition.
world.
It's out of the world, and I'm like questioning. And my client did not even come to me before signing
the contract.
So I'm like, okay, I'll just make this contract unfair. This is invalid contract.
Oh my God.
The the volume folio, the title references were all incorrect, and then the vendor is actually calling me. Okay, what changes do you want me to make so that we can proceed? I'm like, you can't.
Yeah.
You can't. So you need a conveyancer.
Yeah.
Be it you're selling or purchasing.
Yeah.
You need a conveyancer.
Get a conveyancer.
Yeah.
Absolutely.
And I think with PAXA and all, you can't represent yourself
No,
anywhere. You'll have to
but
open a
people
whole new...
actually do. They
Yeah.
actually do. When there is a transfer or something, they actually try to get into PEXA, get everything, and after they move
It's a whole
ahead,
DIY
and they're
approach.
like, okay, it's gonna cost me much more
Yeah.
than actually going to a conveyancer.
Yes, and saving a headache. You
Yeah.
you can't put a value on years of experience.
Yeah.
No way.
Yeah,
You
absolutely.
cannot.
Yeah.
I think-
Be it a conveyancer,
Yeah.
be it a buyer's agent, be it a mortgage broker.
no way.
You cannot put like a money value or a dollar value on that.
Yeah, also, people talk about, let's talk about AI, for example.
Yeah.
AI, like I talked
It's-
about, I do that as well. Look, I
Yeah.
mean, we use ChatGPT and AI regularly,
Yeah.
in terms of improving our efficiency. We would
Yes.
upload building and pest reports to summarize it. We would upload contracts to summarize it. But what would be your tip if somebody is reviewing the contract or title? What are the top 3 things they need to be looking out for, in themselves before even, because sometimes, you send a contract to the conveyor, you have to wait for the review to happen.
Yes.
Yeah.
So definitely hidden special conditions, like I mentioned, if the title is cleared, and covenants. Covenants is something, there are few covenants which are very common, which won't affect you in any way, be it owner occupied or an investor.
Yeah.
But definitely there are few covenants which will actually be a deal breaker
Yeah.
for the buyer. And AI won't actually read and won't make you understand,
Yeah, it's very
even in layman terms.
Correct.
It's very difficult
Yeah.
for them to actually tell you and make you,
Yeah.
because covenant language is
Yeah.
legal language, which
Yeah.
not everyone will understand.
Yeah, fair enough. Yeah, makes sense. I mean, I tell my clients as well. I mean, a lot of clients these days are like, oh, I asked ChatGPT, it told me the 3 hotspots and, the locations to invest in.
Oh my
I was
God.
Oh my
like,
God.
Great. Find me a property in that location, because
Yeah.
that data is old, market has
Exactly.
moved. So we
Yeah.
are looking at live trends, what the market is. Anyways, moving on to Patty, top 3 finance moves that can boost your borrowing capacity in under 6 months.
In under 6 months, I would say debt restructure.
Yeah.
Take a side gig if you must.
Yeah.
And third thing is speak to a good broker.
Yeah, amazing. Spot on. All right, I'll finish with my top three location hacks in terms of that most buyers ignore, but can add serious growth to your portfolio. So it's as I said, we target established property in established locations. So look for those markets where the demand is really tight, supply levels are low, building approvals are low, and you're seeing trends in terms of vacancy rate being low, days on market, stock on market being low. That's a really good sign to understand if the demand is strong and the supply is less, then those areas will continue to grow in value. And other thing is look at income levels. If the income is consistently growing, if the population is consistently growing, then those areas will have high affordability. And if the affordability is high, price growth can occur in those areas as well. So that's kind of my tips. All right, that's the wrap for the property triangle. Huge thank you to both Patty and Nirali for sharing so much of gold content. For anyone listening, your dream property isn't just about the right price. It's about the right plan and the right people behind you as well. If you found the episode valuable, hit the subscribe button, share it with a friend, and drop your burning questions in the comments. We might just cover them in our next episode as well. Thank you so much.
Thank you, Arpit.
Thank you, Arpit.